So there's a couple financial metrics that sometimes trip up an applicant for getting an SBA loan, and they're all financially related. One of them is oftentimes referred to as the credit elsewhere test. And this is important because Congress, when they set up SBA, they wanted to make sure that a really healthy business is not able to go and get these superior terms and conditions that you get with an SBA loan. And the thought process was traditionally that if the borrower is so strong, why do they need SBA financing? Well, things have changed a little bit over the years in that now you have fairly strong borrowers who still do want SBA financing over inferior ordinary conventional bank financing. So it's a bit of a strange occurrence that has occurred in the SBA world, but that's one of them. And if I can explain it more to you, it's basically if an applicant has more liquid net worth, unencumbered, non-retirement, liquid net worth greater than the project cost of the loan they want to finance, the presumption from the government is, well, they could pay cash for it. Now, you and I both know that's probably not the best use of that small business owner's proceeds, the capital reserves, to actually just put it all in cash. But nonetheless, that does exist. And so we've often joked, well, maybe somebody needs to go buy a large asset or something, and suddenly they'll be under the threshold. So that's one option. I don't know how practical that really is most times. But another one of the financial considerations in getting an SBA loan is the borrower cannot have averaged greater than $5 million over the preceding 2 years in their net income of the business. Now, this doesn't happen very often, quite frankly. If you've averaged better than $5 million in net income over the preceding 2 years, you probably have bankers throwing themselves at you. You probably don't need SBA financing. I've had a few instances where they still wanted to get an SBA loan, but it's pretty rare if the business is doing that well from a profitability standpoint. And then the last thing that sometimes trips up an applicant for an SBA loan is that they have to have a tangible business net worth less than $15 million. Now, for the most part, that's okay. It doesn't oftentimes result in a declination to that small business owner who's trying to get that loan, but occasionally it does happen. And oftentimes it's going to be a business that's doing, I would say, 50 to 100 million or more in gross revenue, and probably getting close to that $5 million net average per year. So those are the three big things to consider when you're getting an SBA loan. Is if you fit in one of these three buckets, that you just need to know about it. It could be a problem in terms of getting your SBA loan approved.